Well, cattle futures last week saw pressures coming from multiple directions and did take traders' attention away from the short-term market indicators and focused on a lot of those outside market pressures. Early in the week, the war between the U.S. and Iran did keep a cap on the market's opportunity to trade higher. Finally, around Wednesday, traders did feel confident to focus back on the fundamentals and contracts climbed several dollars higher. Now, at the end of last week, more looming concerns from the JBS plant strike and Senate leaders announcing the Farm, Grocery and Farmer Relief Act that would dive into the packing monopolies and potentially force them to sell operations if foreign-owned, while also limiting slaughter capacity from major feedlots. Cash bids for the week were also lower again. Dress bids down $3 at $3.80. Live bids $2.38, which is down $5 to $6. March feeders Friday finished down $6.97 at $355.62. April fell $7 to $3.51. April live cattle dropped nearly $4 down to $2.34, with June off $3.80 at $231.47. Last week at Bighorn Basin livestock, slaughter cows were $2 to $4 better, selling from $165 to $188. Slaughter bulls steady, bringing $181 to a high of $191. For the bred cow market, bred heifers at Bighorn, they brought $4,600. Young bred cows $3,400 to $4,000, and even older bred cows $3,800. A big feeder test last week at Billings Livestock. 500-pound steer calves sold from $474 to $534. Light 6-weights, they averaged $453, with mid 8-weight steers a top of $3.5. For the heifers, heavy 4-weights, they brought $487 to $500. Mid 6-weight replacement quality heifers $419 to $430, and heavy 8-weight females, they brought $343. And another big sheep sale at Newell Sheepyards last week, as 70-pound feeder lambs were steady at $331, 90-pounders $300 to $302, light 100-pound lambs $237 to $263. Ewes for the week were $7 higher at $131 to $137, and bucks at $113. Stay with us for a grain market update right after this.
From the beginning, we've worked closely with farmers. BNSF's ties to the agricultural community go back 175 years. Together, we've innovated to make the U.S. agriculture supply chain one of the most efficient and productive in the world. Our strong relationship powers BNSF still today and helps us move the nation like no one else can. At BNSF, we move the nation for you.
Now, the grain markets, they were also under severe pressure early last week, with the turmoil between the U.S. and Iran boosting the U.S. dollar on Monday and Tuesday, which left a cap on the gains for the grain markets. Now, throughout the week, we also saw energy prices soar. Crude oil prices also soared, which did add a lot of support to the grain futures. With crude oil and fertilizer supplies on a halt for exports in the Middle East, contracts took off Friday, and our network's Coulter Brown said it best Friday morning. It was a buy now and ask questions later kind of trade day. Kansas City winter wheat contracts, they gained 25 to 30 cents alone on Friday. Minneapolis spring wheat contracts up 18 to 23 cents. Corn futures jumped 5 to 8 cents Friday, with the March corn contract sitting at $4.47. Soybeans, they were able to gain 18 to 23 cents as well, with the March soybeans finishing at $11.85 a bushel. I'm Colton Young. Thanks for watching Northern Ag TV.